A big decision UK savers have to make is whether to invest their money to hopefully see it grow or choose a cash account instead. The main difference here is that cash savings accounts usually come with a defined and reliable expected return, whereas the performance of your investment account depends on the returns of the assets inside it. That can change from day to day and requires you to take a step onto the risk ladder and into the markets in search of potentially cash-beating returns. When it comes to cash ISAs versus stocks and shares ISAs, it's exactly the same story, just with added tax efficiencies. In an ISA, whichever flavour you choose, any growth you see won't detract UK tax, which can be helpful for any interest you receive in a cash ISA or dividends and investment gains in a stocks and shares ISA. So, both accounts carry tax benefits, but how do you choose between the assets you put in them? Cash is great for short-term spending needs and to tap into in case the boiler blows. But over time, inflation can quietly nibble away at what cash can actually buy you in the shops. If the rate of inflation is higher than the interest you're getting on your savings, you'll actually be losing money in real terms. And that tends to be the biggest potential drawback. While there's comfort in knowing the amount that you'll get in the end, it might not be enough to keep up with the cost of living. Investing, on the other hand, goes up and down in the short run, but historically markets have outpaced cash over longer periods. When it comes to beating inflation, the stock market tends to do a much better job than cash the longer you leave your investments to compound over time. There's no guarantee that your investments will make money or beat inflation, but investors choose to put money into the market and accept this risk in search of higher returns than cash. The ISA can come in handy here, as its tax benefits mean you can keep more of the gains you might make. For long-term financial goals, that can be particularly helpful, as history shows us that the stock market tends to compound more powerfully than cash savings. In the end, whether you choose a stocks and shares ISA or a cash ISA depends on how soon you think you'll need your money, your appetite for the ups and downs of the stock market, and how much growth you need to aim for your financial goals. Cash helps pay the bills in the short term, but if you have long-term plans, a stocks and shares ISA might give your money a shot at higher growth without having to worry about paying UK tax on any gains you might make. With Robinhood, you can open a stocks and shares ISA in minutes and invest from $1 with fractional shares, helping build towards your financial goals tax efficiently.